All right. Well, welcome everyone to the meeting of the Oklahoma City Post-Employment Benefits Trust for April 10th, 2017. First item of business that we have is approval of the minutes. And we did have one amendment that we made on that where we changed a reference from Mr. Wanto to Mr. Carlson. And I would take a motion to approve the minutes as amended. All in favor? Any opposed? Next item is to receive the monthly preliminary performance report for February 28th and for March 31st. And Doug is here and is going to just address directly the March 31st report.
Excellent. Thank you, Mr. Chairman and trustees. It's great to be here today. There is a February 28th, and then we worked pretty hard to get the March 31st report to you. You can find that about page 6 or so of your book. And if we look at first the market environment, the first quarter was quite positive. First quarter, calendar quarter of the year. If you look at domestic equities, the Russell 1000 was up 6%. We hold close to a little bit more than 70% equities here of our total fund, so that's a good start to the calendar year, definitely. Smaller cap stocks were not quite as strong. We've seen a shift right after the election last year. Smaller companies and value companies were the ones that did the best, and there's been sort of a passing of the baton between smaller companies and large companies. But it's good that we have exposure in both places. Looking at international versus U.S. equities, international equities did very well during that period of time. There was initially some skepticism, some strength of the dollar arguments against non-U.S. equities versus U.S., but also I think that some results or some events that happened overseas were definitely good for international equities, although in today's environment it's pretty uncertain, I would have to say. And then looking at fixed income, results modest. For the year to date on the Bloomberg Barclays aggregate is 0.82%, but again, interest rates very low across the yield curve. The 30-year bond was, I think, before last Friday, got down below 3% again, 296, and then with everything that was going on Friday, it was 301 to start trading this morning. So long-term, a 30-year Treasury bond, just put that in perspective, 3% yield. That's fairly low, and especially when we have inflation in the United States running a little bit more than 2% by various measures. Growth in the United States is probably going to continue to be fairly modest, but better than Europe. On the following page there, you see performance. The total fund composite, that is the non-reserve assets only. This is effectively the investment portfolio. $44 million for the month was up 0.51%, for the quarter up 4.57%. For the trailing year ended March 31st, up 12.62%. That is versus 11.51 for the benchmark. We're seeing noted improvement versus that total fund benchmark. And as far as the actuarial assumption, we beat it by a significant margin over that trailing one-year period of time. And as far as I know, it is impossible to change the fiscal year.
Yeah. Yeah. I asked him about that the other day, if we could just go ahead and change our fiscal year real quick so we could capture all of that, but we didn't think that was a good idea.
I don't think we can do that. The other thing we could do is go all to cash, and I don't think we can really do that either. Policy allows us to do a great deal of things, but I think that's probably a step too far. Going down the list, notice our bond portfolios here. We have Loomis Sales, which is a very aggressive corporate bond manager for the one-year period, was up 9.42% versus 0.44 for that index. And if you look back at that, if we had a three-year figure for that, you would see that 2015 was a very tough year for Loomis Sales because they were investing in credit, but they more than compensated over the past year. Our other core bond manager, Double Line, up 3.11% versus 0.44 for the benchmark. That in itself is a remarkable rate of return versus the benchmark. Let us not be disappointed with the results of Double Line because they only tripled or more than quadrupled the benchmark rate of return. Both of those bond managers were excellent over the last year. Taking a look at Lord Abbett High Yield, 17.59%. Again, excellent results across our bond managers, except for Hoisington, which is the one that is our shock absorber to risk in the other part of the portfolio. And this is not a surprising return, 7% down for this portfolio when it is meant to counterbalance the risk that we see everywhere else. If you flip these returns over and you make the equity returns negative, we would expect to see Hoisington to have overwhelmingly positive rate of return. So as far as that 6.94% loss, market value only, they're investing only in 30-year Treasury bonds. So these bonds will mature at par, and you will be paid interest until maturity. It's just the market value fluctuates much more than that. Our index fund is tracking its benchmark very close to perfectly. Our Vanguard Midcap is also doing that. Hotchkiss & Wiley, our active midcap value manager, was up 20.6% last year. So they came around nicely as we'd been patiently waiting on. The small cap growth equity portfolio was up 21%, and again, that's a very difficult area to outperform, but we think that they're doing a nice job over the last year. And then our international equity, just over the last month or 2 months, has come back into favor. You'll see that the last year up 13.49%. Remember, this is a cautious international equity portfolio. It's value-oriented. There is some exposure to emerging markets, but again, all of the international equity invested in one diversified portfolio, and then the very small amount invested in cash below. So returns have been good. Where are the easy returns coming forward? Where is the easiest place to invest for reliable returns going forward? It's a very, very tough place to be. Equities are fairly expensive. In the United States, international equities appear to be volatile. They are less expensive. And I think that we'll be talking about that next month with the investment policy discussion. So I'm happy to take any questions.
Are there any questions? Thank you, Doug. And Doug did mention that we did a review with our investment committee of the investment policy, and we'll be bringing that back at the next meeting.
Thank you, Mr. Chairman and trustees.
Appreciate it. All right, I would take a motion to receive the monthly preliminary performance reports for February 28th and March 31st, 2017.
So moved.
All in favor? Aye. Any opposed? Next item is, we don't need to do number 4. We didn't have any changes. Item 5 is ratify claims listing. Move it. Second. All in favor? Aye. Any opposed? All right, and with that, are there any reports or comments from trustees, staff, or interested parties? You guys going to have anything?
I just wanted to recognize Colin Fonda. Colin Fonda has been with the city for a significant number of years, and since this trust has been in place, Colin has provided staff support in terms of some of the reports that this board reviews and approves on a regular basis. Colin is retiring this week. We wish him congratulations. Certainly will miss him and his contributions to not only this board but the entire city organization. Colin does have a number 2 individual who will be serving in an interim status, Gina Jordan, and I want to recognize Gina, who is sitting next to Colin. She will step in and take Colin's place, at least on an interim basis, for probably a few months. So she will be providing support to the trust.
Great.
So thank you, Colin, so much for your service, and feel free to make any comments if you'd like.
You want to make a speech?
No, thank you. How many years is it? 2006 or 7 starting this?
Yeah.
Good. Thanks.
Thank you, Colin. And Gina, look forward to working with you in your new role. All right, thanks. And with that, not having any other items, we are adjourned.